everyone. I'm Dan Basse, President of AgResource Chicago, Illinois, joined by Dr. Bill Tierney, our Director of Research here in Chicago, to talk a little bit about what's going on in the world corn market. We spent a lot of time discussing the U.S. corn market because of the problems that have emanated over this flooding and the inclement weather over the last 4 or 5 weeks. But to put rationing in perspective, and I think that's the key here, we're going to look to Bill to help us out, because in the world market, there seems to be more abundance than the U.S. market, at least right now.
Yeah, that's true, Dan. In fact, there's a record exportable surplus available from what I call the ABUs. Those are the principal competitors for U.S. corn exports, or for global corn exports. That's A for Argentina, B for Brazil, and U for the Ukraine. Those three countries in aggregate are going to capture 57% of total global exports this year.
So in other words, instead of rationing export demand, which is always more difficult than domestic demand because substitution can be different, maybe the market doesn't have to go as high. I hear a lot of farmers saying, well, geez, Dan, everything looks so bad, and it is a disaster out there.
Yes.
It's so bad, maybe corn needs to do like 2012 where we reached $7 or $8. But because we've got these world supplies and the marketplace globally has changed and we've got hemispheric production, maybe that type of rationing doesn't need to occur.
In fact, I don't think it will. I actually, in 2012, thought the market was going to go even higher than what it did. I was shocked to see that, given the stimulus of high prices, Brazil was able to export, up until that time, a record quantity. In fact, in 2012, Brazil was the world's largest corn exporter. I think the U.S. was second largest. And I think the U.S. corn exports fell to, I think, about a 40-year low. So given that supplies from Brazil, Argentina, Ukraine this year are all record large, and that their share of the global market is expected to be about 57%, in 2012 their share was 60%. Having larger surplus this year, and expected to have even a larger surplus next year. When you combine those 2 years of supply, it suggests that they're going to capture perhaps a record share of the global market, meaning that there's going to be less demand for U.S. corn. The other thing is, the U.S. may be a significant importer of feed. I think in 2012, the U.S. imported a record 162 million bushels of corn. Under the current price relationships we see now, they could import more than that. And there's also the possibility of importing some feeds from Canada, particularly barley.
So as we think about it, Argentinian corn and Ukrainian corn today is about 60 to 65 cents cheaper than the U.S. Gulf. This is what precipitates the possibility of imports. The other thing, if you look at the chart, we call it the ABU chart, and you can see the dramatic increase in terms of their exports, which really started back around 2010-11 and accelerated based on U.S. weather problems. The U.S. export share is just really and dramatically declining. This means, Bill, if we go back to this, I'm now talking about domestic rationing, and with that, we can substitute wheat, we can substitute barley, as you suggested, from Canada. We can import corn, and we can see feed residual, which today is sitting at around 5.1 billion bushels. Back in 2012, that number got under 4.1 billion bushels.
Well, yeah, the most difficult thing I have to explain to non-experts, I mean, even other ag economists, is that in the USDA balance sheet, almost everything is directly measured. The only thing in the balance sheet that's not directly measured is feed and residual. What that means is there's no survey of livestock operations to find out how much grain was fed to livestock. It's simply an accounting identity. If you started off with this amount of supply and you ended up with this amount of ending stocks, and you know what exports were and you know what industrial use was, anything that can't be explained, and that's just it, can't be explained, is feed and residual. Now, the best way to understand the conundrum that this represents is to take a look at the amount of grain fed per grain consuming animal unit. And if you look at that, you can see there's huge variability, particularly in years of small crops. But actual livestock production doesn't change. So how is it possible that the amount of grain fed per grain consuming animal unit, that's the chickens, the hogs, the dairy cows, how can it go down by 20% and not see a decline in livestock production? It can't, which means that there is so much sloshing residual air floating around in there. And as a consequence, what we've observed over time is there have been huge reductions in the apparent fed corn in years of small crops. And that's really where most of the rationing occurs. Though I think this upcoming year, perhaps we could see as much as 300 or 400 million bushels less in exports to go along with maybe 800, 900 million bushels less in feed and residual.
Thank you, Bill. Lots of things yet to happen and to be determined. We know little about U.S. corn supplies because we don't know prevent plant, we don't know yield. Those are all to be determined by upcoming weather and, of course, USDA surveys. My name is Dan Basse, joined by Bill Tierney. Thank you for joining us. We'll be back again.